Good afternoon. This is Professor Milligan, and welcome to another Wall Street Wednesday. As usual, I'll give people time to log in. While I'm doing that, let me give my commercial once again, and that is, these are my ideas, these are my thoughts, these are my opinions. Before you do any trading, please consult with your investment advisor or wealth manager, whoever you're working with. These are my opinions and my thoughts. So I just want to share that with you guys before we get started. Another interesting week in the market. Got a lot of things I want to cover and talk about. So I'm just a few more moments. What's up, Christian? How are you, sir? What's up there, boo? So while I'm waiting for people to come on and before I start getting into my in-depth talk, I know that the market sold off today. And investors are worried, people are worried, it's selling off. Understand a couple things happened. CPI was released. So over the last 12 months, CPI was 4.2%. So we have 4% inflation. Anytime there's a rise in inflation, the big fear comes into the marketplace that the Fed's going to raise interest rates. And this is no different. And as you guys know, Fed raising interest rates is bearish for the market. So the market kind of pulled off today because of that. I also believe as the market pulled off, you had some people that are saying, just basically, throwing in the towel. And what I mean by that is locking in profits on some things. And then the other thing is reevaluating some of the tech stocks that they brought in the last couple of months. It's really been interesting because, and I think I had talked about this, and I'm going to talk about it a little bit again. You take all the hot IPO tech stocks that have come to the market in the last 12 months. The Snowflakes, the UiPath, the C3 AI, artificial intelligence. You start naming these things and look at them. What's interesting is they're all trading at or just above their all-time lows. So we've seen a sell-off in the techs. I'm not surprised. So let me people are joining, so let me bring this kind of full circle because it's something interesting. As you guys know, one of the things that I track and been tracking is the volatility index. Now, for those who don't know what the volatility index, it's the VIX. And what the VIX is, just a short definition of the VIX. It's puts over calls. And what they do is they take the S&P 500 on the VIX, S&P 500, puts and calls that mature in the next 30 days. And they put the puts on the numerator and they put the calls in the denominator. So in essence, when you see a rising VIX, what you're seeing is the premium increase on the puts and probably decrease, even hold steady on the calls, which means that more and more people have actually become bearish to market. Now, I've always used, and I've been using the VIX now for, God, I hate to admit it, at least 20 years now. And one of the things that the VIX is a contrarian indicator. So what does that mean? Again, 30 days, so it's near term, but contrarian. So what it does is when the market's oversold, and typically when the market's oversold, that's when puts go up in premium. That's when you see investors want to jump in and start shorting the market or buying puts because they think it's headed to the bottom. And usually on the VIX, when you get a penetration like this, like I'm looking at, it's giving me a buy signal. Now, what I do with my VIX is I put the VIX and I use a 20-day Bollinger Band. A Bollinger Band set for 20-day moving average, set for 2 standard deviations. For those who, again, I'm not trying to dive into all the technicals here. Just want to give you a little brief understanding of what's going on with the VIX. So when it penetrates the upper Bollinger Band, it means we've gone into the tails. Now, all you guys know, when you get into the tails, it means that you're in an extreme area, and we usually look for it to revert back to the mean. All right, so today, the VIX closed at 27, almost 28. The upper Bollinger Band today was 23.5. We penetrated the upper Bollinger Band. So for me and for you investors, what this means is real simple. Now's the time to buy into the market. Now, This strategy, I've used it for years. I've got a couple of students that I'm not even sure if they're on the call, but I have some students that are using the same strategy. And I know it's hard for me to say to you, or for you to look at me and say, what? To go in and buy the market in days like this. But what I'm telling you is the market's oversold. And I would look for a bounce. Now, we could go down again tomorrow, but again, I'm looking for a bounce. So based on my technical analysis, which I've done before using the VIX gave me a buy signal this morning or today. So for those who don't know, or I should tell you, I literally went long the Qs. So again, you're saying, Professor, wait a minute, you're using the VIX on the S&P 500, but you went long the Qs. Yeah, the reason why I went long the Qs is one is there's a correlation between the equity markets in terms of the New York Stock Exchange, NASDAQ, the S&P 500. There's a correlation between them. What we're seeing right now is we're seeing a sell-off in tech stocks, which is basically the Qs. I think they're oversold based on what I got with the VIX. And so I brought the Qs. The other reason why I buy the Qs instead of the actual S&P is the Qs give me more kick. So in other words, I'm looking for the volatility, but I'm looking for it to go to my side, to the upside. So again, real quick, I got a buy signal on the market this morning. Strong buy. The VIX penetrated the upper Bollinger Band, which is part of my indicator. So it gave me a buy signal. Again, I usually tell you guys when I'm doing something, again, not that you can influence this trade, but I actually went long the Qs today too. So I'm long the Qs. I got my stop loss in there, but I'm long the Qs. I'm playing for the market to have a bounce. I believe that the NASDAQ 100, the S&P, the market is oversold. Now, in terms of these worries about inflation, the Fed had come out and said they expected 6% inflation this year. All right, because at the end of the pandemic, business opened back up. So I'm not really surprised that we got a 4.2% on the consumer price index, which is the CPI. I do not, again, and this is just my background, my knowledge, my experience. This is not, repeat, not a move into a bearish market. We're not headed down. All right, there's a correction, there's a rotation. We're rotating out of certain industries, rotating into others. Again, do not think this is, and by the way, just another quick little FYI. Every recession in my lifetime has been preceded by a inverted yield curve. We've had minor pullbacks in the market, but we've never had a full-fledged move or into a bearish market in a recession with a classic yield curve. And by the other thing which is interesting is we're also seeing a rally in certain bond markets. So you're seeing prices run. The prices ran today in the 10-year Treasury. Also, it looks like the prices are running on the Fed funds rates. So in other words, if prices run, that means yields are going down. So again, I do not think, for those who are worried about us, this is hell headed to the handbasket. We're headed to another correction. Yeah, there's going to be a pullback. There's a reshuffling. There's a movement out of certain industries into others. And the other thing, too, is there's a big movement out of the pandemic stocks. The companies that we thought would do well during the pandemic. Well, there's a move out of those because the pandemic's over and we all have cabin fever. Can't wait to get out. The other thing I'll say to you, too, is, and again, this is one of the things I think we saw in this last market. Look, a lot of people out there got their buy recommendations from Reddit. All right, they were buying stocks because Reddit told them to or somebody told them to. They didn't know what they were buying or why. The only thing they knew was I'm buying it because the stock's going higher. All right, those are the same people now that, and as the stock goes lower, guess what they're doing? They're actually selling. Now, here's what's interesting. They ran these stocks up. They said buy them on the dip. Well, I don't know if they brought them on the dip, but I do know one thing. They've gone down from there. All right, so if you're one that's been buying on the dip, especially with these IPO tech stocks that have recently come out in the last 12 months, you're sitting there at literally looking at your all-time lows as they keep going lower and lower. I just heard a comment today that if you love Snowflake at 300, you'll love it at $1.99. All right, enough of that. Let me talk about a couple of things. I know you guys are chomping at the bit, so I covered that. I wanted to cover that. Let me cover a couple other things. Cryptocurrencies. All right, we talked about this last week. I'm going to talk about it again. Last week, I know there was a big push on Dogecoin. or Doji. Everyone was buying Doji ahead of Elon Musk making his comment about, being on Saturday Night Live, and they ran this thing up ahead of it. And now, bear with me a second as I pull up the chart. And now, these same currencies, well, no, I shouldn't say same currency. Doji right now, hold on a second. That's not the one I'm looking for. Excuse me. Doji, come on. That's the one I want. That's the one. All right. So bear with me one more second. All right. So Doji right now close. That's not the one I'm looking for either. Jeez. Bear with me, guys. I do apologize. DOG. DOG. All right, that's the one I'm looking for. All right. So again, as I mentioned last week, I think the way to trade these cryptos is basically on technical analysis, supply and demand. Doji ran up last week ahead of Elon Musk being on Saturday Night Live. So they ran Doji up to almost 75 cents. And as you guys know, Saturday night when he got on, prior to him getting on, he actually started selling off. And Doji right now is closed, looks like close to that, basically 46 cents. It is right at the bottom of his trading range, right at the bottom. It's penetrated that to, these currencies, they'll penetrate and move, but basically it looks like it's closing and trading right at major support. If it doesn't hold this 46 cents level, it breaks down. Your next major support is actually all the way down to maybe even 25 cents. Now, you might think these are some big moves up and down, but the reason why your support is at these levels is because the currency itself ran so much. It went parabolic. So it basically ran from 33 cents, 33 cents to almost 70 cents in 2 to 3 days. So that's why you don't see much support, because they just pushed it straight up. So again, if it doesn't hold this 46, you're at the bottom of the trading range. If it doesn't hold this 46, look for it to actually come back here and test support actually as low as 25 cents. At some point, I think the crypto community might say that Doji coin is oversold or it's cheap down here and buy it. But again, for you guys, based on what I'm talking about with technical analysis, I would not even look at doing anything with this. I would not try and pick a bottom here at support. I would more or less look to trade it at if it goes to that 70 cents. But I'm not trading Doji. All right, that's Doji coin. Bitcoin, same story. Bitcoin right now, wait a second, I'm pulling up. There's my chart. Bitcoin right now is in the trading range. It's at near-term support, which is right around $55,000, 55, 54, where it is right in this range where it closed. That's your near-term support. If it doesn't hold that, look for it to trade down to $48,000. All right, and it's in a much bigger trading range between 48,000 and 60,000. You penetrate that 60,000 and look for it to attack that 64,000, which is the all-time high. But right now with your Bitcoin, again, it's in the trading range. Volume's kind of dried up. I'm looking at the futures, by the way. Volume's dried up on the futures, and it's trading sideways in a range. And again, near-term support is right around where we're at, this 54,000 level right here. If you get a push through this, you can see it attack 60,000, but you're at a major support level. Minor support with major support at 47,000. All right, I'm gonna do Ripple next. So I'm doing Ripple. Come on, Ripple, where you at? There you go. And with Ripple, same thing. Ripple right now is closed at 141. $1.41. You're literally sitting right at support. You're sitting right at near-term support. Near-term support's like 138, 139. You've got some resistance up here at 164. It takes out that 164. You should attack the old high. But again, that is Ripple. Yep. All right, so that's what I would do with Ripple for those who are interested. What's the other one? So I did Bitcoin. Okay, Ethereum. ETH. Ethereum. All right, Ethereum's trading really well. You got some support back at 35,000. You've got some more minor support here at probably 39,000. So on the close today, Ethereum set a new high today, pulled back and is trading close, right basically near its minor near-term support. Again, if it went to an all-time high today, Ethereum pushed through to 42. I'll tell you exactly what it did. It pushed through to an all-time high today of 43.80. Ethereum's trading really well. It's been pushing up. It's got some volume behind the push. So again, Ethereum's doing really well. The other one I'm going to do is Cardano ADA. Bear with me a second. I'm just pulling up the symbol, pulling up the chart. And another interesting one. Cardano closed at 171. Cardano ADA. You got support at 160, 161 in that range. You got resistance at 183. That 183 resistance will take you, if you go through, will take you to an all-time high. We broke out of a trading range in this between $1 and $1.50. It's been in that trading range for several weeks, a couple of months. But now the thing looks like it's ready to run. It's doing some consolidation. Again, I'd be a buy through $1.80. And as I mentioned last week, I like these stories. I like Ethereum and I like ADA based upon what they're doing and how they're applying the currency and the use for the currency, the cryptocurrency. Now, the other thing is, which I'll bring up real quick, Internet computer. It was a cryptocurrency that just came public in the last couple of days. Bear with me a second. I'm pulling up the chart on this. And that's not the one I want. So bear with me a second. Come on, IC. Let's see if that's the one. All right. So here's the deal. IC, internet computer, cryptocurrency. It's been public now for 3 or 4 days. The first day ran up into the $700 level. Close today at 301. It's trading around 301 right now, still trading, but it's down. So this is real simple right now. It's trying to find some footing. It's being touted as a competitor to Ethereum with its business applications, but they can actually handle more transactions in a short period of time and much faster. So again, it looks like it's for real. Legitimate coin. Right now, based upon market cap, it's the fourth largest coin out there. So it's really young. I think the run up the first day probably came from anticipation that we got a new crypto and people wanting to buy the ICO and trade it. Again, for me, you guys know, I think the move through the old 700 would probably be the area I look to get involved. I'm not trying to pick bottoms. Legitimate product, could be ahead of itself right now, but that's what I would do. So again, and I normally don't talk cryptos. And by the way, I added to my Ethereum position. So I brought some Ethereum around the 3,000 level. I brought some more Ethereum at the 39,000 level, and I brought some more on the run today up at 4,000 and change. So I think my average cost is about 3,600. I shouldn't say 1,000. 3,600, not 36,000. 3,600 is about my average cost. But I have been buying it, and you guys know I don't buy on dips. I basically buy on breakouts. All right. So that's the cryptocurrency. I covered those. I wanted to bring those up. I don't see any questions on the crypto, so cool. I'm going to move on. What do I think happened with the oil stocks? It's a great question, but hold on one second. I'll get to that in a second. Let me just get through everything I want to talk about. So I took care of the currencies, cryptocurrencies. All right, commodities. Lumber has finally broken below its 10-day moving average. So if you were in lumber, when it broke through its 10-day moving average, you should have closed out your long position in lumber. It does not mean I would short lumber. I think this is a pullback, profit taking. I don't see anything that's changing the demand for lumber. We all know the prices have gone up, but I would close out my long position, take my profits. It broke below its 10-day moving average, sit back and patiently wait. And when it starts to run again, I would initiate my position. If you're long copper, just hold it. Copper now is in the trading range, and it hasn't shown any reason why to come out. And by the way, guys, I mentioned this to you before. The longer something stays in the trading range, the more support it has at that level. So the fact that copper right now is in the trading range will let you know that it's forming support. All right, and as long and if it goes that way a couple of weeks long, it's going to start giving you a major support at this level where it's at. So again, I would wait for watch copper, hold copper. Now the other one, which is new, I'm adding today, is you can go out right now, in my opinion, and short coffee. All right, coffee's coming in. I'm getting both a fundamental and a technical sell signal on coffee. So I would short coffee, play coffee to the short side. So that's what's going on with coffee. All right. So those are my commodities that I've seen that actually you can trade right now. So those are my opinions on those. Those are positions that you can take right now. And again, close out lumber, take your profits if you have it. It's broken its 10-day moving average. Hold your copper. For those who have not taken a position in copper, if it breaks through its old high, out of this trading range it's in and breaks to the high, get long copper. And you can short coffee right now. Just go short coffee. All right, I got that done. I'm moving down my list. Now, the other thing I talked about was, and I know I'm throwing a lot of things at you guys today, but we talk about a lot of things. The IPO market. All right, I've always told you this, and I continue to tell this. There's so much money to be made in the IPO market. Now, if you're following the IPO market, there's certain things that you should see. One is these tech companies that are going public now. Even the ones that open up at a premium, they're not holding the premium, all right? So in other words, stock IPO's priced at 20, opens up at 25 or 30. That's it. They're not holding it. They're not going to 35, 36, 37, 38. They're not going higher after 2 or 3 days. They're pretty much holding it and actually even coming in. Now, why do I tell you this? The reason why I tell you this is this. When these companies go public, then they're hot. There's a lot of enthusiasm behind it, and there's a lot of trading behind it. People that are buying it based on hopefully that's going to break out and continue to run. When these things don't hold their pricing and they start to deteriorate, you can short them. Almost every major tech company that's gone public over the last 6 to 12 months is trading at or near its all-time low. All right? A number of them have actually broken their IPO pricing. That is as bearish as you want to get. So going through my list real quick, App Lover, symbols APP. Let me type it up. App Lover, APP. All right, there's one that you can short right now. Another one that also is SMWB. Priced at priced at 22, opened up below 22, and has been trading down ever since. And last is Honest, Jessica Alba's company, HNST. These 3 IPOs all came public recently. In fact, the Honest came public, I think, last Thursday or Friday. Priced at 16. And it just broke below 16 today. All right, that is, for me, that's bearish. All right, HNST, I'm pulling up the chart right now. Yeah, so it was priced at 16, opened up the first day, opened up at first day at 21, went as high as 23, $23, almost 24. Second day, same thing, and it's done nothing but sell off. And actually, yesterday it broke through 16. Today it had a little bounce. It's at $15.45. I'm here to tell you something. When an IPO, especially one that's only a couple of days old, breaks its offering price within the first week or 2 weeks, it is not good. So Honest, again, the other one is SMWB. Similar ways, priced at 22, opened up. So today was the first day of trading. Follow me now. Priced at 22, So SMWB, similar web, priced at 22, opened up, and the high today was 22, and closed today at 21 and 87 cents on a low of $19.75. The day a company comes public and can't hold its offering price or trade above it, you know there's issues. You probably can't find stock to short now, but I keep an eye on this SMWB Limited, which means it's a European company, but I keep an eye on it, and I'd be looking to short it. No question about it. Those are the ones that I would look at. The last one, which every week somebody seems to ask me about it, and so I actually pulled it up this time, was a Favor, FVRR. And I told you last week that Favor had a Head and Shoulders bearish chart. And I told you that support was right around 180, 189, 190. Well, it broke that, and now it's close to that 166.65. I expect it now to trade in a new trading range between 145 and 188. So yes, this stock could actually go as low as 145. And that's support that's coming back from back in November of 2020. So that's what my call is on that. So again, Flavor, FVRR. Let me type in the symbol. Speaking about favor, excuse me. Bear with me a second. FVRR is the one I was just talking about. All right. So I'm hearing some questions about these oil stocks and some other things. So let me just go through and see what I missed in terms of questions. So let me say this. I would not be buying the oil stocks based upon what's happening with the pipeline. What's happening with the pipeline too, and I've been reading up on it and watching the news. The oil is actually, they have enough gas at the pumps and they have everything that they need, even though the pipeline shut down. The challenge they have now is they have no trucks to actually get the gas to the actual pumps. So that's what the problem is. The problem that they're having now is just delivery. They've had situations with that. So I wouldn't be playing an energy stock based upon the shutdown in the pipeline. I wouldn't. And what run-ups we're seeing now are probably going to be short-lived, especially once this thing starts opening back up. So if you actually were lucky enough to be involved beforehand and you got a quick pop-up, I would recommend you take your profits and go about your business. All right, let me see what else. Let's see. Hey, what's happening, James? So James is making some money off of what? You said you're making some money off of dry bulk shipping. What's my current take? James, I haven't looked at it. You're one of my former students who's extremely bright. So I'm going to say that if you're looking at it, James, and it's working, it's probably a good idea. So I would take a look at it. So I have not looked at it. I just haven't. I've been more, believe it or not, James, I've been looking at more at these cryptocurrencies over the last couple of days. And I've been also looking at the market as a whole. I have not looked at any of the companies that you just mentioned. The other one, oh, by the way, the other one I looked at too is I looked at the home builders. And again, a long discussion on home builders. The one thing to look about home builders is home builders are always lagging the market. So what do I mean by that? Because home builders have to build and have to put in inventory. I'll take a look at that symbol, James. Give me 1 second. Just because home builders have to, it takes time to build a home. You can't put a home up in a week, 2 weeks, especially when they're putting up these big homes. Thanks you, James. I miss you guys. Miss you too, man. James just said he missed my teaching. I miss these guys. If it wasn't for James and people like that, they're the ones who push me to keep getting better and keep learning and keep my knowledge sharp. Because these guys will test me. They test me all the time in a loving way. They test me because they're curious and they want to improve their trading strategy and investing. So what I was saying on the home builders is there's a lag between how long they get it, before when they decide to build a home and they actually have the home built. So because of that lag, when you see demand go up, you too, Christian, you were part of that team. When you see demand go up, it takes home builders several weeks, months to actually get enough inventory to actually meet that demand. When demand stops, your home builders are sitting there with all this inventory that it's going to take them weeks or months to actually get it out of the shop and at the discount price. So it's a lagging industry in terms of what's going on with demand for housing, just because of the turnaround time to build houses. So with that said, all I'm going to say to you guys is, I don't think there's a real estate bubble. I don't think that bubble is going to burst. I don't think the Fed's going to raise rates. I think that the demand for houses is actually going to stay fine. I think that after this little minor correction we're going through, I think it's going to pick back up again. So with all that said, though, I do say this to you guys, that when the bubble finally does burst, when the demand for housing starts to finally slow down, just be careful with these housing stocks, because you could get caught with inventory. That's what I want to say. All right, let me see what else. NMM. All right, haven't looked at this stock in years. Shows you what I know. But see, this is what makes this so good, because you can't see everything all the time, and at times you need to depend on other people that are like-minded. So the reason why I'm saying this, James is like-minded. James has made money trading. James is very bright. In fact, when James was a student of mine and we were involved in the student managed investment fund, James's team, not just James, but the whole team, just kicked butt. They did a really great job. So I'm not surprised that he's still kicking butt now. So what I'm doing now is I'm looking up here at this Navios Maritime Partners. The symbol, again, is up there, is Nancy Michael. All right, James, so here's the deal. I had to go back. The reason why I went back, guys, is for those who don't know, I always start with charts. I go back and look monthly, weekly, and then daily. The reason why I go back and look at monthly is I want to see where the stock's been over the last 10 years. So looking at this NMM, and let me type it up again so everybody has it, so knows what I'm looking at. NMM is what I'm doing right now. So as I look at this stock, first thing that comes to my mind is stock was trading as high as $320. And that goes back into September 2014. Now, you guys might think that's a long time ago and I should put it behind me, but understand this. You have some mutual funds out there that will buy and hold this stock for the next 10, 15, 20 years. Part of it is they just don't cut their losses. They'll sit with this because it's going against them. Near term, we're right at resistance near term. If you can break through this $36 level, $35, you got some resistance coming up in here in the $70 range, $75, $78, $100 range. So between a low of about 70. So let me switch this to a weekly chart. See if I can narrow that down a little bit for you guys. Yeah, let me switch it to a daily. Yeah, no, I'm looking. Yeah, so once you get through this $40 range, the high 30s, $40 range, your next area of resistance, believe it or not, comes at around $100, $105. So you got some free sailing in there. Let me go to a daily chart. Let me spread this out a little bit. All right. Hold on a second. All right, so now I'm on a daily chart. So James, you had support right around the $32 level. It broke that support actually yesterday and today. So it broke it today, and now you're in an old trading range between 29 and minor at 26, major support at 22. So on a technical analysis, if you're trading this, you've been trading it, you probably got stopped out, or you should have been stopped out. If you're still in there, you need to see it hold this level where it's closed. You need to see it hold here. If it breaks below this $28 level where it's closed today, if it breaks below here and opens up, your next support is at 26, minor, and major support at 23. So it had a nice run. But the volume's light too. And I guess part of this might actually do with the earnings. I saw earnings came out. They estimated it was $2. So they missed earnings. So that could be another thing too. They missed earnings. So that could be making it sell off. All right. So that's NMM. Is somebody asking about Rocket Mortgage? Is that RKTG? I mean, Rocket Mortgage is RKT, but I'm not sure what RKTG is. So I think you're asking me about Rocket Mortgage, RKT. Daniel, is that what you asked me about, Rocket Mortgage? I'm looking now. All right, so I'm going to hop. I'm not sure if that's what you're looking to ask me about, Rocket Mortgage. So, all right, Rocket Mortgage. Thought so. Surprise, surprise, surprise. This thing has had major support at $19 in that range. It broke that. I'm trying to really find out where your next level of support is. Bear with me a second. All right, Rocket Mortgage sitting at all-time lows. Sitting at all-time lows right here. So this is a Milligan. I would not buy this stock. In fact, if anything, I'd probably short it. There's, one of the things that we talk about with technical analysis is place of least resistance. Least resistance for this stock is actually going down. It's easier for it to go down than it is for it to go up. You got a lot of stock hanging overhead. It broke down. You're sitting at all-time lows, even after the spike we had. Contrary to what's going on, think about this. We're in a hot real estate market. Mortgage rates at the lowest they've been at, and Rocket missed their number. All right? They missed it. They reported 89 cents. Estimate was for 90 cents, and there was a standard at $1.01. So they missed the number. So that's also not, how could you miss the number in this market environment if what you're doing is generating mortgages? Doesn't buy too much confidence in this. And what's interesting is the previous quarter, they blew the number away. Estimate was for 88 cents. They reported $1.14. So easy. Again, I think there's more resistance to more resistance easier to the downside, but more resistance to the upside. So in other words, I'd be more comfortable being short this stock than being long. Yep, it is just not living up to expectations. So whatever's going on, it's not good. All right, and by the way, Rocket Mortgage came public back in August 2020. So it's been almost a year, and the stock's basically going through its all-time low. I would not stay with this. I did short, but I definitely wouldn't stay with it. All right, LRCX, Lam Research. Haven't looked at this in years either. Again, I'm just switching to a monthly chart. I think, yeah. On Lam Research, you're looking at all-time highs. So I always like stocks that are trading near their all-time highs. So we got that. Let's go to a weekly, see what it looks like. All right, cool. And let's go to a daily. All right, LRCX. All right, let me say a couple things to you on this real quick. Another one, you had major support, which now is major resistance at $600 a share, right around that $600 number. Prior to that, so you got major support where, at the $600 level, which you broke. You're testing right now the next support level, which is at 557, 550 in that range. You're right there. If it doesn't hold this, your next major support's at 512. So you got a bunch of stop levels here. 512 would be your next major support. So if you don't hold where you're at now, this 557, look for it to actually come down to this 518 and maybe even test 5. Like I said, 518, 520. Yeah, test that. To the upside, if it can break through this resistance at 600, which was old support, then you can expect it to actually try and challenge that old high of 670. So you got some minor resistance at 645, and you got some more at 670, which is the old high. When I look at a weekly chart, by the way, and I apologize for this. When I look at a weekly chart, again, I'm looking at LRCX. Let me put it in here. LRCX. CX. So when I look at this on the weekly chart, which takes out the volatility, yeah, you had a major breakdown today. The question is, can it bounce back off of this? Prior to this, you've had some corrections in the past, but that's going back to March 2020, which we all had that correction. So I think again, no opinion here, just looking at the chart. For me, again, I would like to see it hold where it is. If it starts to break through that 600 level, you might challenge the 670. All right, let's see. Somebody's asking about Hertz. Didn't Hertz just declare bankruptcy? HRTZ, is that Hertz? No. Yeah, Hertz is in bankruptcy. All right, Hertz is in bankruptcy. I don't know why it ran. Not my kind of stock. Not my kind of stock. The only reason being is because it's running off of hype or news. And if it does actually work through, there's a ton of stock sitting there at $11. I mean, years and years worth of stock sitting there at $11. Not my kind of stock. Just not. I can't even give you, I honestly can't give you an opinion on it. Let's see what else. Somebody asked me about Star. STAR. Haven't looked at this one in a long time either. iStar. Whew. Again, another one. I'm looking at the monthly chart. This thing has been all over the place. I'm not sure what they do, but based on technical analysis, again, not my kind of stock. You work through this $17 range where it's at. You're gonna hit. You're actually hitting at 17. You're hitting some major support and resistance. Going back some years. Not my kind of stock. I'm not sure who's trading or why you're trading it, but the one thing I'll say to you is that if you're looking at technical analysis, there's some really good-looking charts out there, some really good-looking companies that I think you'd be better served looking at them than trying to trade this thing. I'm not trying to be funny. If you buy, if a car looks like a lemon, drives like a lemon, and you buy it, most likely it's going to be a lemon. And don't get me wrong, you can spend the money to fix it up. But while you spend the money to fix it up, you could actually be enjoying a ride, another car that can give you a lot more fun and less worries. You guys keep giving me all these, let's see. Market access. Haven't looked at this one in years either. Market access, I'm just going to a monthly chart. Market access. Interesting. Market access. Interesting. Yeah, near term the stock's trading well. I'm looking at a monthly chart. You're right again. You're right at support at this $430 range somewhere there. You're at major support. So just a hair above it. So you want to see it trade there. If it can get through that, let me switch to a daily chart. Market access holdings. Yeah, so bear with me a little second. Let me zoom this up. All right, so just what I thought. You're trading at, right now, you're trading at major support. You get through this major support at this $432 level. You've got resistance right here at the 486 level. You've got some minor resistance at 452, which is nothing, but the major resistance is up here at the 488. So if you do manage to get through the 455, 460, which is minor, you're gonna hit a wall at 487, and that's old trading range. Yeah, and you've had some volatility in here too, and it looks like that they've been missing on the number. They missed on the number, so earnings were ahead of it. So basically, looking at this again, I would say to you that long term, you're probably okay. Near term, you need to see it bounce from where it is. You need to see it bounce off this. There's a lot of stocks right now that are trading at or just off their near-term lows and not trading well. So we need to see a lot of them hold support. All right, let me see what else. I'm checking my time. SLB, is that Schlumberger? Wow, I haven't looked at Schlumberger. Typically not my kind of stock. Wow. I'm going to a weekly chart, get a little more time. And the reason why I'm in a weekly chart is Schlumberger right now sitting at resistance at this $32 level. If it can push through 32, it'll be in that trading range between 32 and 40 bucks. And you got a lot of traffic there. So if you're in Schlumberger, near term, look for a nice little pop. If you can get a nice little pop, but again, from 32 to 40, at 40, you got more resistance at 40. Then after you get through 40, you got more resistance at 45. So this thing's got a lot of work ahead of it. So either be a long-term holder. If you're a trader, gets to 40, take your pop and go about your business. Great question. What is Professor Milligan's type of stock? Easy. One that's at and setting all-time highs. I'm not trying to be funny, but that's where I start. You want me to start looking at a stock, literally, if it's not at or near its all-time high, I got no interest in it. None. Reason being, it's just too much work. INMD, haven't looked at this one in a long time. In a mode. Traded this one a couple of years back, a couple of weeks back, a couple of months back. It had a nice little breakout. But then it fell off, and it has not figured out how to. So let me take that back. It fell off. I'm going back to March. Then it rallied back again, and then we just had another sell-off the last couple of weeks, last 2 weeks. So what's going on with this near term? All right, like a lot of them, here it is again. Another tech stock. It broke through support. There was support at 80 bucks, major support at 73, 74 bucks. And you're right now in the middle of the old trading range. The old trading range is, again, between 73, 74 bucks and 65 bucks. So you had a 10-point trading range in there, and it's right back in the middle of that trading range. You had earnings come out. It looks like the stock could not hold off of earnings. The estimate was for 53 cents. They reported 69 cents. So here's another one of these stocks where they actually beat the number, but there's no follow-through in it. I can't tell you why, but there is no follow-through. Yeah. And it even started, it actually, at the earnings is when it broke support, the minor support. All right, that's INMD. Let's see what else. JYNT. Joint core. Again, like a lot of techs, it's right at support. I'm not even saying tech. I don't know the company, but I'm just saying right now, like a lot of stocks in the market right now, it's right at near-term support. Right here at $49 and change. If it doesn't hold here, it could easily pull back to 41. This is the reason why I really think, just my opinion, the reason why I think that we're going to be fine. Because you have a lot of stocks basically that have traded down and sitting there at support. So let me see if I can explain it this way. When a car breaks down, that's a lemon, you're not surprised it broke down. All right. So when you're driving, let me clarify even further. You're driving a lemon, you know it's a lemon. And all of a sudden you start smelling smoke and you hear some clunking. And the first thing you think in your mind is, it's a lemon, and I pretty much expected it to go down here. Now, you're driving a brand new high-end car, top of the line, whatever, BMW, Mercedes, Tesla, whatever. And you've had it for a couple of weeks, all of a sudden you smell smoke and you hear some noise. You're actually surprised. But as you're surprised, the first thing you think is, I'll just take it back, get it fixed, and I'll be fine. You don't think the car's a piece of crap. So a lot of stocks you're showing me that are sitting here trading right at their near-term trading range, at the bottom of their trading range, at support. These are good companies. They're not crap. Now, they might go a little further. They might trade sideways for a minute, but they're not crap. The crappy ones are the ones that won't come back. The quality companies will eventually come back. The question is when. So the reason why, and this kind of goes to the question, what stocks do I like? I'm looking at the JYNT. This is a stock that I would look to buy. I look to trade. But again, for me, it has an upward trend. It's trading well. It's pulled back to support. I would not buy it till it moves through that old high, which is around 57, 58. Again, I buy them on the way up. Buy them on the way up, sell them on the way down. I mean, that's just me. So, and there's a saying on Wall Street, the dear get dearer and the cheap get cheaper. So I'm not looking to try and pick the bottom and say, oh, it's down here and I can buy, a snowfall. Prime example. And I talked about it earlier in the call. SNOW, sorry about that, guys. Snowflake, I'm sorry, I called it snowfall. Snowflake. So I'm looking at a chart on Snowflake. All right. Snowflake right now closed at $191. This is a stock that back in December 2020 was as high as $425. All right. I got no interest in Snowflake. I'll look at Snowflake when it gets back up in that $400 range. Right now, there's so much work ahead of this stock. So much. And for me to sit here and try and guess the bottom, and think about it. When it went from 400, it hit a low near term of 308, then it rallied. But that rally failed. Then it hit a new low of 296. Rally failed. Came back to 206. 270, 260, 270. Rally failed. Then it broke 270. Went down to 250. Then it broke traded between 240 and 210, 217, 215. But then it broke that. So you keep telling me, where is the low? Where is the bottom? I can't figure it out, and I don't think anyone else here can. So rather than me try and chase this thing and try and figure out where the bottom is, as I heard on the Financial Channel today, if you loved Snowflake at 300, you'll love it at 190. If you liked it at 300, you'll love it at 190. That's another Wall Street saying. That's crap. That's garbage. I know I got a couple of minutes. That's one of the first things they teach brokers when I was a broker on Wall Street. When you sell a client a stock at 400 and it's not working, you pick them up the phone call and say, hey, Mr. Smith, if you like the stock at 400, you're going to love it at 300. So we're buying more. That doesn't work. All right? It's a way salespeople get you to put more money behind a bad. But don't do that. It doesn't work. All right? You get that phone call from your advisor. If you liked it at 400, you're going to love it at 300. You'll love it at 191. That's just him trying to get you to invest more, trying to put more money into your account. Don't do it. All right? So, with that said, Snowflake, I'm totally honest with you. Call me at 420. When Snowflake's at $420, I'm interested. Between 191 and 400, too much real estate, too much going on. And I don't want to be in a stock that's trying to fight and work its way back to where it once was, which could really take, 6 months, a year, 2 years. I mean, even if this company got a takeover offer now, the takeover is not going to be at 420. Takeover would probably be at 250, 260. They probably turn it down. So I don't see the upside to this. All right. I beat that up enough. Not trying to beat it up. I'm just trying to emphasize a point. Let me go take it. NUE, which is what? Nucor, if I remember correctly? Yeah, Nucor. All right. Here you go. Business material. Great looking chart. Only thing I'm looking at now is I just want to see how close it is to the all-time high. I think we're really close to it. Yep. Okay, that's what I want to see. We're right at its all-time high. Pure technical analysis, so let me give it to you. So here it is. Let me give it to you right now. Oops, let me pull this down. All right, you got some. So let me see if I can explain this a little more. I like that. All-time high is my new name. I'm not sure if I want that. People might think I'm doing drugs if you come by and call me all-time high. Um, there's a trading range. So I'm doing Nucor, symbols NU. So I'm doing Nucor, N-U-E, sorry. So there it is. All right, I got to go back. The stock was trading from the end of March until beginning of May. Stock was trading between $75, $76 a share and $82 a share. Earnings came out and the stock just ran. I mean, it just ran. It basically went from $82 a share to well over $102 a share over the next 4 or 5 days. Now, for those, it's kind of interesting. For those who are in technical analysis, we call this the Fibonacci's. And I only got a couple of minutes, so I got to wrap this up. Called Fibonacci's. So you had a move basically from $82 to $102. So you had a 20-point move. A 20-point move means that you can expect a 10%, a $10 pullback, 50% pullback from that run, which means that technically Nucor could pull back to about $90 a share and still be in a positive trading range. So it's pulled back to $96 a share. If you're in it, this is the hard part. If you're in it, you might want to hold it, looking for it to test. But if it breaks below that $90 a share, it's probably headed back to 82. Because the other side is, if it consolidates, which it's doing, and goes sideways and consolidates, it would make a charge and push for that old high. So right now, if you're looking to buy it based on the breakout from earnings, you missed it. All right. What I would do is, like I said, I expect it to pull back to about $90 a share. If it pulls back to $90 a share in that range, it should trade sideways. And what I would look to do is, again, attack it when it goes through the 102 number. If you buy it at the $90 range, $92 range, I'm thinking that it's the near-term pullback on the fibs. It could actually pull back to 80 and still be technically okay, just so you know. And part of that reason is, and here's the thing too, they didn't beat the number by much, but they beat the number. The thing you got to do too is you need to actually go look and see what they're forecasting going in the future and what made this stock run so much off this earnings report. Because, I mean, this stock ran. After the earnings report came out, the stock was at 77. A week later, the stock was at 82. And then from 82 to 100 in the next week. So this stock's run over the last 2-3 weeks based on earnings. All right. You were looking to buy, you missed it. Yeah, you might have missed it. But, you know, Mike Milligan, and I'm hopping after I say this because I don't want to run out of time. I need to save this recording. The Mike Milligan statement is, you might have missed it, but there's always another train running. So you might have missed this train. Don't go running down the track chasing behind it. Just look for another train. Or maybe the train will actually pull into another station and give you a chance to get back on. But don't chase it. Don't chase it. Once the stock moves above 10% above its breakout. So if the breakout price is 80, if it moves above that, which is 10%, which would be 88, I wouldn't buy it. If it's below 88, I'd buy it. So don't buy breakouts that are more than 10%. All right, I'm going to hop now. I appreciate you guys. I thought we had a really good session, a lot of good ideas out there. Hopefully you guys are making money, using these ideas to put some money in your pocket. All right, talk to you later. Have a great week. See you next Wednesday.